Just for some background, we started this company last year. We IPO'd in December. We spun this, our main asset, our starter asset, up in Timmins on what we call the Shaw Dome, and you'll see this when we get the deck going. We took that out of another junior company called Rogue Resources that I run as well. And we've been trading since last December. Okay, let's get into it. And you'll see mine is a mix of the last two, actually, wherein we have both high grade and a large scale, low grade deposit that looks very similar, we believe, to our neighbors up in the Timmins camp, Canada Nickel. So if we could skip through to probably slide 3. There you go. Okay, 3. Perfect. Okay, so we're doing the PowerPoint. Yeah, so I'll just give a little bit of macro background. I know in a room of nickel investors, I probably don't need to tell this part of the story, but I have spent the last 3 months on the road meeting with car companies, European and also Asian meetings. And I probably understand this a little better than many. There is not enough nickel in the world for the electric vehicles. And I know that's a big reason why there's the excitement and the interest, but it's a very large concern for the electric vehicle companies. And I'll tell you, it changed radically from meetings at the beginning of 2022 to meetings in the fall of 2022, wherein with the requirements from the EV companies for low carbon cost, compounding further the just lack of nickel units, it is really setting up a difficult time for them. And also, if you click ahead. Yeah, so there are complications that go beyond just carbon costs. So that's the most straightforward. We're going to target with our project having lowest quartile carbon cost. But then beyond just carbon, what the EV companies are seeing are the guardrails of their world closing in on them. So when you take Russia off the board because of Ukraine, they are now focused in on Taiwan and the Chinese dollars behind Indonesia and Philippine production. So you've got these car companies, Western companies, that are very stressed about just finding the nickel with low carbon, and then these complications that go beyond just carbon, whether you get into the broader ESG. So jump ahead. So I'll zip through these quickly. As a nickel junior, I of course talk about Elon Musk's call at his battery day, but the more interesting thing for me was when Musk pointed out the absurdity of the nickel supply chain as it has developed, where you have nickel material going around the world before it hits the final users in Asia. Then pick your demand forecast for EVs. Most are being seen as less aggressive than the reality. It's leading to a real pinch. So by 2030, they think that the majority of nickel demand will flip from being stainless to battery. And again, the supply is just not there. Next slide. And specifically within nickel, when you talk to the car companies, especially the European car companies, because of the regulation in place and passed with the EU, 2024 is going to have all vehicles sold in Europe stamped with a kilometer zero footprint. And when you go into a Volkswagen dealership, the difference between the diesel Jetta and the complete electric Jetta is going to be simply the footprint related to the hunk of metal for the battery. So as a result, the car companies, especially Europe, and they see this as just being a first domino, are focused in on the lowest possible carbon because it's very real for them. Their vehicles are going to be stamped, and then subsequently the regulators are going to turn the screws. That's all in place, and it's happening. So it's a really screwy situation where demand is ahead of supply on what they're requiring. So the carbon thing is very real. Next slide. And then thinking beyond, and I'll jump through these next few clicks quickly, just access to nickel. As I mentioned, with Ukraine cutting off Russia, they're now very concerned about Taiwan having a bigger impact on the top suppliers. And if I think about the recent legislation out of the US, great news for us, the Inflation Reduction Act, where they've expanded out the definition of domestic to include Canada and Australia. That's great news, but frankly, it's protectionism. and it is making it even more of a dire situation for the European buyers. Next. And as I mentioned, broader ESG. So the concern about environmental, ocean tails, labor, child labor. Who owns the companies? We're seeing that protectionism in Canada right now with the decision around the lithium companies. It likely rolls into additional metals. And the way we see that is it's leading the automakers and their battery suppliers to get more aggressive, and we're seeing them be much more interested going up the supply chain. So here I'm going to talk about resources. We're very early stage, 3 to 4 years away from production on one of our assets. That's of interest now to the new demand to the auto companies. So what we have is known nickel mineralization and exploration potential. We're just south of Timmins. I'll show you. We have an enormous land package, over 30,000 hectares. We have over 100 kilometers of strike, and we have 2 tracks to potential development. So our first track is our high-grade W4 zone, which had an historic resource on it from 2010. That's what EV Nickel initially started with. We have, with more recent drilling, discovered an extension that goes below the historic resource on W4. That's currently in permitting. We've applied for our mining lease, and there's a potential operating plant just 7 kilometers away, owned by one of our shareholders. And with that, we are targeting production in 3 to 4 years. Our large scale, the second track, we call that the Car Lang. We've drilled off 1.5 kilometers of a 10-kilometer trend. It looks very similar to Crawford with some really interesting differences. It's very near surface. We have minimal overburden with a lot of outcrop. It's a big difference from Crawford on that front. We're targeting a similar grade to theirs, and ours is actually all clear cut because of logging. So for drilling, we have access to the drill. Next slide. So here we are. We are 30,000 hectares just southeast of Timmins, an easy 30-minute drive all the way down. On our property, sort of owned by a neighbor, is the Redstone Mill, which is operating now. That's on the west side. That company also has another high-grade deposit. Across the street from that Hart deposit is our W4. That's our high-grade track. Car Lang up in the northeast, that's our large scale. So it's a wonderful place to be. It's very easy access from an operating perspective, and we're seeing it now with drilling. It's a great place because our labor sleeps at home at night. Next slide. So I'll go quickly through this. This is what we adopted, this is what we spun out from Rogue Resources, the historical resource on W4. As mentioned, it's a little under 700,000 tons. Not economic size, obviously, but it's great grade, the type of grade that gets turned into mines. Primarily within 200 meters of surface, we see the W4. It was open pitted with the past technical studies. We're thinking about going underground from 500 meters and up, but this historic resource is from surface down to roughly 200 meters. Next slide. So when we took over the asset, we did our first drilling last summer, and quite simply, we tried to drill on both sides to figure out if it extended on the flanks. We were successful in that it did extend, so that was our first drilling last summer. We also had some great grade, almost 8.7% nickel over more than a meter. It's very good grade, the W4. So that was last summer. Next slide. It gives you a nice shot of very high grade piece of that hole number 1. So 17 meters of beautiful pentlandite. Next slide. So first half of this year is the exciting stuff. So on W4, we went from the other side of the river, got a better orientation, and we discovered this new W4 extension. So we had 17 holes, more than 5,200 meters, and we confirmed a whole new zone. That was going from 200 down to 500. Plus we interpreted the top part. It had been thought of before as being 3 separate lenses. Now, geologically, we think it's one big consistent lens. Next slide. So here you see the historic resource with 200 and above, the top half with all the historic drilling. Our new drilling, other side of the river, coming in at a better angle. We had great hits. This slide, you see the next slide. So great hits, that's the next horizon down. This is all coming into a new model for which we're going to do a new updated W4 resource. And our objective on this one, we currently have 700,000 or a little under on the books. We're hoping to double it. So this becomes important when we think about the local mill. It's permitted for 2,000 tons per day. We're looking at running there, plus potentially driving it down to Sudbury. This kind of grade can travel. But I think of this as being, we currently have 1 year of life on the books. We're hoping to get a second year of life. And that's what we're permitting, the W4. And there's very interesting mineralization across the street. And next slide. Other spots around our property. So if I think about on our first track, the high grade, where else will we find mineralization? Just northwest of the Redstone Mill is the rest of that trend. There's been excellent hits on there in the past by other companies. In addition, on our east side, we have the Langmuir number 2 mine. So that was an old mine that operated and it halted because of a crown pillar collapse. Completely separate from the crown pillar, we have level plans where we know where there's good high grade. And obviously that is a rich option for potentially extending even more life. Plus, there's the second red star that I highlighted before. Ours is on the yellow on our land. Across the street, our neighbors, private company, currently an investor in the company, they have an even bigger resource already on the books. Next slide. So this is the same map, but it gives you a summary of all the geologic data. This is really what gets our technical team excited. The Shaw Dome is a very rich target environment. Our issue is really trying to prioritize our targets. Next slide. And bigger picture, this is really what we're pumped about. So the geology of our property on the Shaw Dome, we feel is very similar to the Kambalda Dome. So technically speaking, Paul Davis, my VP of Exploration, spent over 20 years exploring up in Timmins. He also spent a good chunk of time down in Western Australia. The Kambalda, on a very similar plot, a very similar size on the right there, has produced over 50 million tons. And the deposits, very similar geology. Paul and the team feel as though them coming in flows, it's a very similar, ours going east-west on the Shaw Dome. And what's exciting for us is that it has not been systematically explored. So this is my arm waving slide. We may have a Kambalda on our hands. At a minimum, I know going down the flow, we have very rich targets for exploration. Next slide. So let me shift over, track 2, large scale targets, sort of thing that you just heard a couple of presentations ago from Canada Nickel. When you distill down the Crawford deposit, as they say, the world's largest nickel sulfide discovery since the 1970s. When you distill that all down, Crawford main zone is about 1.8 kilometers by 360 meters. And that's what got them with their billion tons they talk about. Next slide. So across our property, we have acquired a bunch more land that came on top of last year's spin out from Rogue. This included really interesting large-scale targets, both in the northwest and the northeast. Next slide. Where you see those, when you look at the MAG surveys, you see a very similar geologic size. We have Crawford in the bottom left there for the same scale. And it seems as though we have a lot of potential Crawfords across our property. We're focused in on the Carmen-Langmuir targets, the ones on the right on this slide. Next slide. This is Carmen-Langmuir. We call it Car-Lang. It's 10 kilometers of similar mineralization. Again, we have the Crawford Oval there as an example to compare what they got their billion tons off of. So on our property, Car-Lang, we drilled this summer over 8,000 meters on that dotted area. It's really neat because on this, you see the outcrop, the gray circles, that's outcrop. We'll come back to that. Again, I'll talk about overburden comparison. But we've also got lots of surface sampling with very good grade. On the top half of this, 40 samples that were done on an historic study, they had 0.33. So we're excited about this. Next slide. This is our summer drilling. So this is that 1.5 kilometers. So again, the thing extends for 10 kilometers and we've drilled 15% of it. We're getting these holes back now. So these were the 28 holes we ran this summer. We've had 4 assays back. They're good. We're targeting about that 0.25. And this is going to be our news, getting all those yellow dots back over the next couple months. We drilled down about 250 meters. That's where we stopped. Most of our holes, we're going to continue in the dunite. So we pulled up at 250. I'll come back to that. Next slide. So if I compare ours to other large-scale deposits up in the Timmins camp, so there are other large-scale deposits. We know they're up there. But as we get these things drilled off, we're going to start having to compare against them, which is, nobody has processing. This is a big boy potential deposit. We are a venture-listed company. We are very likely going to have to partner with someone to get this to become real. But when we compare these deposits to try to figure them out, none of them have processing. So when you look at the actual deposit, as mentioned, ours has been clear cut, so it's very easy to access. We use a Timmins-based contractor that's choppering in on other deposits around Timmins. So we've got easy access. Our overburden I mentioned, we're going to be 8 meters or less on the overburden. On Crawford, in their study, they go through 40 meters of overburden. They don't have outcrop, we do. And the depth as well, it's important. We drilled down to 250. Their mine plan goes to 690. We'd go a long trend before we went down to that deep of a pit. Next slide. So that's a summary of what we have going for us. Next slide. So news ahead. We've got drill results over the next couple months. Then we've got new resources coming out on the Car Lang and on the high grade. So we've got a lot of news ahead of us. Next slide. This is an important quote. I don't think you'll hear it from anybody today, me as well. I think we are deeply undervalued. Next slide. But I can show you. We IPO'd at 75 cents, and the things we've done since then, as we slid to 15 cents. So we proved out the W4 extends east-west. We tripled our land package with a transaction that was very, very good terms. We proved out the deeper W4 mineralization, so the extension, and now we have this new A zone. Next slide. We've got a very tight structure. We've got 44 million shares outstanding. It has us trading at 7 million. I know we're tight. We have a significant insider holding. Friends and family is about a quarter. And very importantly, we have about $1.2 million now in cash. So we've got money to go. All the drilling's paid for. We've just got a couple of reports ahead of us, but the important thing is we hope not to be raising at 15 cents, and we've got enough money to live for a long time with what we have in the bank. Next slide. So comparables. This is me, 7 million equity with my 2 tracks, right? High grade and low grade. Enormous land package, but I've got that good 1% grade as my main resource now. Next. So I could compare to Class 1, also Timmins based, same grade as ours. Their resources double ours. My VP of exploration discovered their deposits. We know it well. We think they've topped out on their Timmins property. We're just getting started on ours. They're worth 3 times as much. The low grades, so I've got FPX and our friends at CNC up here. I've talked a lot about the comparison to Crawford. I think we've got Crawford on our property, if not better, with the overburden, and we've got no value for it in the stock. And next. And this may seem absurd, but I do genuinely comp us to Talon. I think on our property with the prospectivity, with the high grade stuff, that we could potentially have a tamarack on our land. And I'll tell you, I'd much rather be permitting that in Timmins with Ontario and the federal government aligned than being in Minnesota. Next. So that's me, quick summary, not as much of a geology lesson. We can run you through all that, Ray, if you have any questions about the geology. Paul's here. And I just think we represent a huge amount of potential, and we're deeply, deeply undervalued.